Planning is relatively cheap compared to an audit. And if you don't plan right, it costs you a lot. Anyone who pays taxes and lives in New York and New Jersey knows that they're paying a fair amount of income tax. As I mentioned before, Florida doesn't have an income tax. This also involves, in some cases, the estate tax, the inheritance tax. Now, that's a little more of a mixed bag. Again, Florida has none. New Jersey has no estate tax, but can have what's called an inheritance tax in certain circumstances. New York, on the other hand, has a full-fledged estate tax. They'll start cross-referencing income tax records with the estate tax filings and property taxes and start looking deeper at your factors of life that they have available to them. The best way for them to get that information, of course, is by an audit. So another thing that people think will ensure anonymity in this situation is not to file certain tax returns. That's a problem, because if you don't file a tax return, the statute of limitation never runs. Years and years down the road, they can come back at you. You might not get audited during your lifetime, but once you die, the state looks at not just your estate tax, but they'll look at your income tax filings. And your family might get caught paying income tax for prior years, plus penalties and interest. So you may be gone, but those tax liabilities aren't. We have a method that mimics, if you will, what an audit would look like, anticipating what the state would be asking for. And we address those unfavorable factors. We don't have to address every one of them. It's not an all or nothing thing, but we look then to see the most important ones, and we try and realign so that in a real audit, those are already taken care of.